can just start it up by introducing him. I'm gonna get the link for Steph and stuff because she's not here today.
Oh yeah.
And you're good to
Hey,
go.
hey dudes, hey everybody, welcome. December 18th, 2024. We've got JMoney Stocks Jackson to talk some wisdom to us. To talk about his year, talk about maybe some look ahead to 2025, how he traded. Maybe brief breakdown of his strategy. I've encouraged everyone to go watch last year's interview, and I think a lot of people have. So they're familiar with your work, what you try to do. Every week we do sharpen your trading skills, right? Where we talk about specific and pertinent to the time trading topics and lessons that we can learn from and make those incremental improvements. And another great way of doing that is learning from some other traders and how they make those incremental improvements. With that being said, Jackson, what up, man?
How we doing? Thanks for having me, fellas.
Absolutely. So I mean, first off, what a year it has been in 2024. Just a continuation, right, of the end of the year last year. Feels like it's honestly blended together since like that November bottom to now with a couple little blips in between. What stood out to you? Like, what do you want to talk about? Like, what stood out to you this year? How did you trade? What were some lessons you learned? Yeah, man.
Yeah, so I think the last time we talked, it was kind of in this well, we came out of the circled region. We then we're retesting the highs, and that was early January. That was the last time we did the interview, and had really good traction going then. And then into March, like I started the year out very, very well. It was, kind of a dream start. And then, not gonna lie, I got smacked around for sure. Wasn't fun. I kind of in that 8.5% correction there. It really wasn't conducive to swings, and started to try to day trade, just try to develop a strategy that wasn't my own. And it hurt. So you know, at the end of March, I think I was up 125% or something like that. And it was like, oh my God, I'm going to have an amazing year. And then suffered a pretty, bad drawdown. And it was just day trading with size. I mean, we're talking stupid little ranges and, just trying to catch every tick, going on tilt. And I just got away from my strategy.
That
And
was a really choppy correction too. That was a really tough one to get a read on.
yeah, it was for sure. I think in March, I can't even remember why it was the big drop, that 8.3% drop. But, I just kind of went away from my strategy, and, kind of smacked me in the mouth a little bit. So got back to, what I've been doing that's, kind of works for me and works for myself. And, then had another good run, as you can see, coming out of the bottom of that 8.3% correction. Did well here, and then I believe this is when the SMCI and Nvidia, when all those gapped up and hit their parabolic shorts. Had another little bit of a drawdown again. I think it's just at that point I was sticking to my strategy, but it's just part of the game. You're going to take losses. And then have been able, that was the yen carry trade right here, the 16.1% correction. It happened very fast. And then, I mean, from there, it was kind of straight up. The weekly chart doesn't really, it looks like it's straight up. The daily chart, I would definitely argue, was not. And I'll take you to that. But closing out the year, doing pretty well. I still am not back to where I was in March. And so it's really frustrating because you can imagine how bad it was in March. If it's taken me all this time to get back to where I was, it's certainly been frustrating, but it's just a good reminder to myself to just, don't try to be somebody you're not. try to develop a strategy that doesn't work for you, and don't try to day trade. Big money's not made in day trading. It never has been. Any of the great traders will tell you that. And so just stick with who you are, because it's a painful lesson. So this
Can
is
can I ask in March, and thanks for being vulnerable and forthright about that, is what do you suspect kind of catalyzed a little bit of that interest in trying to do some of those shorter term trades?
I think just swings weren't working, and I was bored, and I wanted to make money. And once I, through March, once I was, basically what happened is I was very high on myself.
Yeah.
I was like, holy shit, I'm crushing it. You kind of lose track of all your rules. You start taking on more risk. You start putting on bigger positions. As my account was growing, I'm increasing my size. And then it just kind of, spiraled. And so I think it was just, I had a hot head. I was excited, and I just got a little ahead of myself. And so when swings weren't working, then I thought, okay, well, I'm having a great year. I'm going to try, something else. I know what I'm doing, and didn't. So it sucked, but yeah, we're fighting back.
Absolutely. And then like where about, or what kind of reignited, I suppose, the push, or not the pushback, the flip back to, like I said, your core strategy that you post about on Twitter, and your swing trading, your participation in leading stocks, is like where and when, or what thoughts kind of preceded that reawakening, if you
When
will?
I had the drawdown, I mean,
Yeah.
when it's like, what am I doing here? And this is not who I am. It's, you kind of reevaluate everything you're doing and say, okay, let's get back to the basics. Let's get back to what I'm good at. And just kind of wait for the pitch. I think I was just a little bit, bored when swings weren't working. I was just wanting to make money. And so I was trying things that weren't my style.
In now, what about like this drawdown in July on the daily chart? Like I said, that like yen carry trade from QQQ 503 all the way down to the 200-day moving average at 423. So that was a fast and really drawn out one. In fact, Bracco, we've got some models. Which, Bracco, if you want to talk about at all, this to me, that QQQ daily down cycle from July 11th to August 5th looks identical to Oliver Kell's cycle of price action in his book Victory in Stock Trading. During something like that, when the market is actually drawing down, what do you like to do? Are you sitting on your hands, not participating? Are you trying to day trade this to the short side, versus like this box in March that was just sideways, where you were trying to scalp some ranges, it sounds like?
I mean, this is what the daily looks like here. So, this is when SMCI topped. This is when NVIDIA topped. And so I remember talking about this last year too. You got this 1, 2, 3 candle range up here that then fails to the downside. Well, this massive sell bar off the top, I mean, that's almost like a little bit of what looked like today, but look how that dominates the next 3 days. It can't get above that high. And then I'm sure this was on news or something. But then you just had a massive wedge drop through the 20 EMA. And so like in a perfect world, and I didn't do this. In a perfect world, I'm sitting on my hands. I mean, unless there's a picture perfect short, I really don't like to short. It's never going to make me a whole bunch of money, or it's never going to get my goals accomplished of what I'm trying to do. So, in a perfect world, I think you're just sitting on your hands, and you're kind of waiting for that next opportunity. And you can kind of see, so we broke off the top with that three bar break, broke through those lows, and then came back down more. This ended up being a bear flag back into the 20 EMA there. Let me move this. and then had another wedge drop down through the 50 day, and then kind of flagged back out without ever being able to fill this gap down here. So that's definitely showing weakness. And then this was, I believe, a Monday morning when we like truly bottomed, and that was when, I mean, everything was down. I mean, that was capitulation.
And were you
Obviously,
getting involved heavy that day to the long side on some things?
I don't remember exactly what I was buying, but certainly bought some stuff. I mean, especially when you open on the lows and then you can push all the way back, that's a big move. Let's see what it was. So the high of the day was 441. The low of the day was 422. So, I mean, that's a 5% range day. You can see that definitely some bulls are showing up, and just the magnitude of the drop, 16% in just a couple weeks, like definitely going to be due for a bounce. I didn't know it was going to be the bottom, and you got to take some longs there, and that's in my opinion just from risk to reward. I can't even remember if stocks were setting up at the time. Can't remember what I bought, but definitely had some positions on. And then things were looking pretty good here. We had a nice rally. This was a playable rally. I had swings on in this position, but we were never able to take out that bear flag high, which we initially sold from, was like the second leg down. Never able to take that out. And in this period, I was definitely thinking like, okay, that's a flag. We're retesting the 50 moving average, retesting the 9 EMA. And I was pretty bold up in this period, only to get stopped out of all my stuff. I mean, it wasn't fun. But it's volatile off the bottoms. It's kind of what happens. It really was looking good. I had positions on and got stopped out. It's part of it. And this next day here, after we had this big down day right here, and then we put in an inside day, that had me start looking for longs again. I want to say I put some stuff on that day. Can't remember what. But then once we went inside up, it's like, okay, no one's ever going to know if that's the swing low. But the key is you are just trying to pepper in some names. You're just trying to say, okay, if that's the swing low, can I find some low risk setups? And then you kind of see what happens. I think that's the best way to approach the markets, is once you realize like there could technically be a level that you're interested in, or things or maybe you're getting an oversold bounce or something like that. Like what I always do is I'm looking to see, okay, what has held up the best? What are the leading stocks? And then, I'm just trying to find something with a low risk entry. If it were, in that kind of a market, I would imagine I'll be selling some into strength just to protect the downside. But then, if you're trading correctly, the worst thing you're going to do is get stopped out for break even on the rest. And when the next part of the rally really took legs, so like that was a good day. That was a good day. I believe this was Fed or
CPI. Yeah.
CPI. Yeah, you remember. It looks like a really bullish day, but at the time it didn't feel bullish because we gapped up, and then or maybe it was in the morning, we basically retested the previous day low, undercut, and then really rallied once CPI. Yeah, CPI is in the morning. So anyways, that turned out to be a very bullish candle, and then kind of had a nice, again, tradable rally up from here. From in this range, it's just a pullback to the 20 EMA, and then we kind of went sideways a little bit. So then
that September 11th candle was very interesting. So it was like, oh shit, this is a bear flag. They were breaking down, rejecting the moving averages, and then all of a sudden, like, boom, snap back. and then things were triggering left and right, those relative strength stocks that were just going sideways, putting their bottom at the open actually.
That was the day you got very aggressive buying things, if I remember correctly.
Yeah, I went from like one position to full, like my full account was in swings on that 9/11 candle.
Yeah, I think so. I've noticed and started to notice like this was, a big down day, right? And like everyone thought that we were going to retest the lows. Everyone thought that, the market was cooked. The next day we gap up, which was right here, put in that inside day candle. So when you get like extremes to the downside, and then the next day you can put in an inside candle without violating those lows, I think that's a sign of, a sign that some bulls are stepping up, and maybe we aren't as weak as we might have thought if we're not going to go ahead and retest those lows. And so if you look at that September low, and if you look at, let's see, like that one had an inside day. This one had an inside day, although we undercut the next day. But and then that was the Trump rally. This was another inside day. So we broke through the 20 EMA inside day. We couldn't push down any further. Either bears are losing steam or bulls are starting to buy again. And I had put something out on Twitter, I think, when this happened too. So I'm not saying it's a science, but it's something to take note of, I think.
Oh yeah. One question that I'm thinking about while you're breaking down this QQQ is, have you put any weighting or how much observation do you give to, especially since July 11th, the divergence, maybe not so much the past week or so, the divergence between the NASDAQ, the IWM, and the S&P? Because if you look on September 11th, July 11th top, short-term top in the QQQ, IWM actually was ripping. IWM on 7/11 was up 3.6% that day, while the NASDAQ had put in that nasty sell bar. IWM was just emerging, and even since like that top of there, S&P was a little bit more predictable or cleaner trader, if you will. And I know you don't trade the indexes, but with the semiconductors and SMH certainly lagging this move the past four or 5 months, the QQQ has been kind of held back, which for me, had I been looking at the QQQ a lot, I think would have possibly held me back from maybe a few positions. So I'm just wondering if you navigate those 3 indexes or the weighting you give.
Yeah, I never look at the QQQ. Or I'm sorry, the IWM. It's, for me, it's kind of just a waste of time, because I feel like it's the world's crappiest companies, the smallest companies, and so I'm mostly a tech trader. Of course, I'll have a name that would be in the S&P 500 sometimes, but for the most part, I like to focus on tech stocks. So for me, like, it's just if stocks are setting up. Like, I'm not going to look and say the S&P 500 looks good, the NASDAQ looks bad, the Russell doesn't look good. I'm not going to sit here and try to figure out which one takes precedence over the other. I think if stocks are setting up, those are the ones you want to be trading in that time.
Simple as that.
Yeah. So, all right. Leads us back to, let me get, oh shit, I just exited out of that. Sorry, guys.
You're gonna go through some trades or some stocks that you've been involved in?
Yeah, for sure. I just want to show this real quick before we move on, because this is kind of where we're at now in the market. So, today was brutal. I'm sure for a lot of folks, it wasn't a good day for me. In hindsight, I probably could have trimmed some things up as we were really extended, but it happens. You had a great run like this, and you got some stuff with a lot of cushion in it, you want to try to stick with them. And so very easily, on a bad Fed reaction, I'm thinking, okay, maybe we test the 9 EMA or something. I don't think a lot of people foresaw a 3.5%, down day. And so what we did, I mean, we took out 2 weeks worth of action in 2 hours to put the magnitude of it. So we essentially broke through every open gap that is supposed to act like support that didn't today. But this is kind of the line in the sand for me right here. Like I don't know if anyone subscribes to Adam Mancini, but he's a great futures trader, and I subscribe to him simply for his trading methodologies. I don't trade futures, but he is incredible on the psychological side, and he's very good at teaching kind of how price action works. And so, yes, we just broke through a lot of support, but I would say this is in the QQQ, the line in the sand for me. And this is what I would be called like very meaningful support. So we're going to have to see how this line kind of reacts over the next few weeks. So that's where we're at today. We had a big wedge drop down, and there's not really any setups. We were talking on the stream before we started. It's a really weird market because we're at highs, or we were at highs last night, and you also at the same time have all these oversold breath readings. You have the oscillators that are at, everyone sees the stat on Twitter about how we haven't seen this since August, and I think the time before that was June or something, when that has bottomed the market. But those times the market was also at the bottom. And so it's really interesting that you're getting these breadth readings and oscillator readings when we are just now coming off the highs. And so we're going to have to see what happens.
One thing, my dad always loves giving me like those statistics. Oh, this is the most down days in a row for the Dow, since he's a big Dow Jones guy since 1977. And I'm always like, listen, in every market there's a stat. Like every single day there's some sort of statistic that comes out. I will say the percentage of stocks above certain like midterm moving averages to me is like the most interesting thing in the world right now. How this ends up playing out, I am excited and curious how it plays out. And
Yeah.
I'm just curious what sets up. Like I don't know what I'm going to trade, or if I'm going to trade, or like if I can, and what's going to allow me to. I'm super curious.
Well, what kind of concerns me with the breath readings thing is so like a gap up tomorrow, or a rally for tomorrow would not surprise me at all. But you can't really ignore this sell bar. I mean, that is a big wide body ranged sell bar. And so what those breath readings could do is you do get that bounce. You do get something like this, and then you come up, and then you go like this, and then we start to have that 9 EMA coming down. Well, I guess it'll be down here by now, but you get my point. Is that, are we going to get an oversold bounce that then eventually gets sold into, which could present some nice short opportunities? No one knows. We're going to have to see. So, but I think this will probably take some time.
I think so too. It's gonna be very interesting. So 2023 was the year of SMCI and Abercrombie and Fitch. For you, I don't think anyone traded ANF better than you did last year. What you got any Abercrombie and Fitches this year?
Have not touched Abercrombie too much recently. I'll get into. I pulled up a few things, and you can kind of let me know if there's some you'd prefer to go over than others. But Jev, Kava, App, and Alab.
Yeah. You pick your poison on those. Those were some killer moves this year.
Okay, sounds good. We'll start with Alab. So this was a new IPO in the market. Let me make the chart a little bit bigger. You can kind of see this was a new IPO in the market. Anytime you I think any IPOs you should always keep on your radar. But what kind of when I started to watch it, it hit my scan, I believe, on this October 7th day, October 8th or 9th, something like that, when we gapped up, and that was not even an earnings report. I can't remember it was. That earnings report came about a month later. But this is when it came on my radar, and this is when I started to trade it. I watched it for a couple days. It came back down and put in this little flag pattern to the 9 EMA, which is also HVC right here. You came and tested this HVC. That's when I started to trade it. Had a nice little move here, and then before earnings, the market was feeling some pressure. I remember I did not hold into earnings unless I have like amazing cushion. So then it had the earnings gap, and that's when it kind of gave me, like a new life, I would say. That's when the stock has a new life. Didn't mean to do that. And if you notice, what's awesome about that earnings gap is that earnings gap was through the IPO high. Okay, so now it's like, all right, this thing is really showing some strength. It's already back up to highs. It's an IPO. That's like something to be excited about. And I got involved, so I didn't get the low. That would have been a great entry. I think anytime you come in and you test the earnings gap support, earnings gap low, it should always be on your radar, especially with volume like that. But the next day, let me get an arrow on this thing. The next day here, it had an upgrade or some note, from an analyst or something in the morning. And I was already watching it, but that was kind of my reason to, pay way more attention to it. And so I took a position that day, and, kind of from there, it was pretty easy. So you kind of get this nice gap up through the previous high. Here we're short-term extended, but nothing's wrong with it. You come back in and you retest that previous high. We also filled the gap on this day at 96.79. We held the 10 EMA, and then these two inside day candles, I increased my position. And then you kind of just have this really, really nice run, which we've had. And so you could, I think of this one as a leading stock. And so I want to do everything I can to stay in it. And so
quick question to pause you there real quick, based off what you just said. When you said you consider this a leading stock, I know that's kind of like, you like to follow the leaders and stuff like that. What are a few characteristics you look for to like spot, what is a leader and what's not?
Yeah, first and foremost, price action. If this stock is acting better than 99% of the other stocks in the market, that's definitely leading characteristics just by price action itself. And so this one, for the most part, it was right. I don't have a 5-day moving average on my chart here. It's on my hourly chart I can show later. But for the most part, a leading stock will ride the 5-day moving average, and that means it's just like super strong. Leading stocks, fundamentals, obviously. So this had a great earnings report, as you can see in the price and the volume. And I don't even need to know what the numbers are, to be honest with you. Like,
I was going to ask how much fundamental you kind of look at, or if it's just really basic.
It's pretty basic, man. Like, I want to see, obviously, earnings growth. I want to see the 30% growth in sales and EPS. But look at this volume on the earnings gap. That's the highest volume it ever had. So it really tells you that the street was caught off guard, and there could be a nice run coming into it. And then, another leading characteristic I would say is that it's a new stock. It was an IPO just a year and a half ago. And so you can get some really nice moves from, a company that's starting to really find their footing.
He's like Kava from last year. Yeah.
Yeah. Literally exactly. And I have that pulled up. This was Kava. It's almost the exact same thing. And March or February, that was the earnings report. That was when it blasted out to new highs. So then, I got stopped out of Alab today. I don't even know how you say it, Alab, Alab, whatever.
Doesn't matter.
Yeah, got stopped out of there today, and I really wish I was able to hold it. I just don't know if I feel comfortable about the market. I could be kicking myself tomorrow and Friday. But for me, like, had a really nice run on it. I could always buy it back, and we'll see what happens from here.
Now, something like that A-Lab where you sold that today. I was curious, I know you don't want to, give away everything, but, as far as, sell rules go on some of these, like for example, selling that A-Lab today, what did that really come down to for you? Was it kind of, the broad market pressure or, just get into that a little bit?
Yeah, for me, I just sold it strictly off the market.
Okay.
If the market were to stabilize, and also kind of something I wanted to talk about was, failed breakdowns. Failed breakdowns are really becoming my bread and butter in terms of entries. It really just allows you to take on minimal risk, especially when you were to find it in a leading name. And so, the way I see it, this is some good support here. Today filled the gap. It got pretty bad in there, but then we rallied up before into the close. And so, like, for me, I really don't know if I'm going to buy it back right now. I got to see the action, but it would probably start with something like, reclaiming this 126, 125 range. So yeah, another one I can talk about Kava a little bit. It's almost the same setup as A-Lab there. So this one was definitely technically more clean though, because there's so many fun things about this chart. This is when we were bottoming, and I didn't even have it on my radar here. It was, I want to say, an earnings report that then I started to, really put it on my radar. And I definitely, now that I think about it, I was watching it strictly off the weekly chart and strictly off it being an IPO. And, everyone knows what Kava is. It's a very easy business to understand. So then I got really involved once we came down and retested the earnings high volume close. That was, I was pretty bold up then, had a big position on. And then we retook out that $45 pivot, retested it a little bit later, 2 days later, 3 days later, pushed out to new highs. I got stopped out here. And then I guess that was definitely got stopped out here. I remember that very well. And then I want to say this was an earnings report. I don't know what else it could be. But then re-entered here in this little flag pattern right underneath highs, and then had rode it up pretty nicely, got stopped out here, watched it for a little bit in here, and then had it back on in here. Definitely I had it on up here too, and this was certainly painful. That would be a 3-bar push or a 3-swing high push or something like that, you could call it, where it makes a new high, it fails to make a new high, fails to make a new high, and then it falls down to the 20 EMA, and I was out of it then. So yeah.
Did you re-engage in that after the August 5th lows at all, or was that your last trade on it?
I did. I just didn't really have the same conviction.
Yeah.
We're getting just so extended, and I just like that is a hell of an earnings gap, and then it rolled over. I don't have more of the chart showed, but that was basically the relative high. I think Jev, I got a really good chunk of this, and this was coming out of too when the market was acting like crap. I was talking to you a little bit about a failed breakdown, and so look at this one. This is another IPO. I didn't realize I have all IPOs showed up, but This 158, 159, that's pretty obvious support, right? And this day basically marks the bottom, and it was a big gap down that ended up reclaiming this 159, 160. And so a failed breakdown is a very, very powerful entry tactic. It basically, if you were to be short in that stock, you're probably going to be stopped out or be covering your shares, especially if you were to find it in a leading name. You're able to take on minimal risk and see if it can work. Had a nice run here, and I was still holding it in this little flag pattern. I remember there was news this day and it sucked, but it only lasted for 30 minutes and it immediately whipped back. And, from there, kind of the rest was history. I can show you kind of the run it went on. And it was an easy one to hold. I'm not involved with it right now. But the interesting thing about it right now is what I was looking at before I hopped on the call with you guys. It's yes, you could definitely argue that is a head and shoulders pattern, but at the same time, this almost looks identical to the base that we caught the run on initially. So this was its last gap that mattered. This was its last push up. This is a big time support. And what we did over the last, a month and a half, 6 weeks, 7 weeks, we've retested it many times. And so that's established support. We broke through it today, supported the 50 moving average. Now it kind of gets interesting to me. Do we sell from there, or what I'm kind of looking at is that another failed breakdown? So if you're looking at it here, you can see how this zone has been worked really well. We filled the gap. The 50 moving average is right underneath. If we were to reclaim this 322.17, I would probably be interested in it. And I know it's below moving averages, but there's not too many stocks that are only 10% off their highs. So I could still definitely see this going on another run. The weekly definitely looks heavy, but we got 2 more days in the week where if we were to reclaim that level and reclaim last week's low, I think that would definitely be significant. So failed breakdown, reclaim last week's low, reclaim previous day's low, reclaim an hourly low. That's really where a lot of my entries are coming from right now. And
are you using low of day stops on those days that you try to take those, or are you just judging based off the action, or what?
Yeah, I will. It depends. If it starts to roll over right away, I'll just stop out at the low from when I entered. But for the most part, once it works, I'm starting to sell some, and then because I can then kind of finance my position. And then I'm not gonna lie, I don't use hard stops for the most part, just because I think a lot of times one man's stop is another man's entry, and that's kind of the definition of a failed breakdown. And so it's just kind of gauging the action and controlling the risk, especially if I have part of the position already financed.
Nice. Are you really ever buying breakouts on anything, or are you mostly just buying pullbacks in support on majority of your trades?
It just depends on the market. I think I definitely do buy breakouts, but it really has to be special. It has to be a big catalyst. It's got to be an earnings gap. In my opinion, if you're buying a breakout, it's just so hard to gauge risk. It's so hard to know where to put a stop. It's so hard to know when you're wrong.
Yeah.
And so Avgo, that I did get involved in this one, ended up getting stopped out, but I did, get some on this breakout, and that's because it was a monster move on monster volume. And that's, I'm not buying for the most part a breakout that's up 3% because of I don't know, because it's a bullish technical pattern. I just think there's too much risk that can get sold into, and I've noticed over time that my losses, a lot of them, I lose more money on trying to buy a breakout because I don't have a logical place to put a stop than if I were to try to buy a failed breakdown where I know I'm wrong immediately.
That's that one's interesting. So the kind of breakout versus support buys, if you will. So I talk about, or we talk about with everybody, is I want to be buying on day one of a higher low confirmation, or day one higher high confirmation. You know what I mean?
Yeah.
So like, for example, if you go back to to A-Lab, that 11.18 after earnings, when you kind of undercut that earnings gap, and then like remounted the 90 MA, broke out of that wedge right there, a flag right there, right where you have your arrow. That's day one, like higher low confirmation. And then that pullback where you retested those highs, that's your higher low. When you break out over those IPO highs, that's your higher high. So like, I don't want to be buying on Thursday 11/21 when we're breaking over 100 on day 4 of that move, because where the hell are you going to gauge risk? It's and there's that better entry on that day one hold of that higher low.
Like if I were to be buying this, like, it sucks because you basically have to get it right when the market opens, because, look at that wick. You're not going to be able to hold very much, comfortably, in my opinion. The next day, even if you did held it, the next day it comes down. Like, I just wouldn't feel comfortable in that position. I wouldn't know when I'm wrong. Like for here, if I took an entry on this day, well, I know I'm wrong if I then re-break that support, or even at the low of the day of the day I took the entry. And I can, so this is basically what it looked like here. So you got, the gap support. We came back in, took this little flagging pattern, and my entry was this arrow right here, where, so we gapped up on that note, and then we fought back, held this is the 10 EMA. So gapped up, came back in, held the 10 EMA, pushed through VWAP, and then started buying some in here. And I didn't know, like, I remember I only had like maybe a 1% cushion or something like that. I didn't know, obviously, that this would happen, but due to the earnings report on the left side, like due to this big volume, due to this move, it's a stock for me that I want to be involved in. And so if I was on this day, if this were to roll over, well, I would have just, gotten stopped out. But this is an example of a leading name that I want to try to get into. So there's, any entry, you're going to have risk.
Yeah. And it's just how easily can you accept that? Where can you accept that risk? And on what stocks, right? And one thing that I've always, especially respected about you is your stock selection. Like even your list going through these, these are some of the best stocks of the year. And Tesla is another one. To reconstruct, recently. In fact, if you want to, I've got some comments on that. If you go back to on Tesla, it's like the exact same pattern as A-Lab on Monday 11/4 and the election day, not the post-election day. Tesla gave that exact same pattern.
It always, if you want to catch a good trend in a really powerful leading stock, there's always going to be a catalyst. And you're gonna need, you know, a really, really good push like this. Like that means that there is super strong demand. There's gonna take time to consolidate this. And so I actually bought Tesla the day of the election. I certainly wish I had some beforehand, but this was the day right here, the day after the election. And so I'm not going to be able to go see what the 5-minute chart looked like, but I basically bought on a VWAP reclaim. Mm-hmm. So we gapped up, came back in, and then we pushed through VWAP. So that was right here, and had a nice, you know, profit from the beginning. And, you know, this one, you know, you had the massive move on the election. You're thinking, okay, Elon's in with Trump. Like this could maybe produce a really nice run. And so from here, like, look at how tight this trade was. So we then pushed up the next day and literally didn't sell at all. And so basically got it from 281 to then it went to 358. And I did sell some, but not enough. And this was a very painful week. I really, really wanted to stick with it. And I just knew because we were so extended that it was going to take time. In hindsight, I wish I sold more for sure. But this sucked because it went from 358 to 309. So, you know, 12% pullback. While you got a pretty decent sized position on, you know, definitely still comfortably in the money, but you're like, damn, wish I had a little bit smaller right here. And then kind of got bailed out. I remember this day when we gapped up again, that was on an upgrade, and then that was like a 7% day. We had really tight action in here, and I'm looking at this like maybe a little handle before we break out to new highs, and we ended up pushing this range, but unfortunately, it got a little bit ahead of itself. We failed that high again. Still got a position on. Definitely frustrated at this time. But you know, I'm long all the way from down here, so I'm really, really trying to stick with it. And then this right here. So, okay, had the new high, a little bit of a base. Like this looks like an hourly cup and handle to me, right? Mm-hmm. This handle is when I started to then put on a lot more. Finally pushed through. So we failed once, failed twice. The third time, pushed through. And then, you know, from there, there's just been nothing to do. I've been trimming along the way. Today I still had on about a 15% position, which I ended up selling. But yeah, I mean, I think the moral of the story is a lot of these runs that we're looking at, you know, their moves start from an initial nice push where then you say, okay, this is a leading stock. This is a name I want to be involved in. Now, how can I find, you know, some low risk entry in it? Like if I wasn't involved, look at how here. So this is the 10 EMA. I'm using the 9 EMA on my stock charts chart, but like look at this tiny little undercut of the previous day's low off the 9 EMA. Like weekly undercuts, daily undercuts, it really does. It really does pay off, in my opinion, if you start to pay attention to them.
I absolutely love those like undercut days. Again, when they're already a stock that I want to own, I'm trying to find a way in, and excuse me. In fact, it kind of pisses me off sometimes when I don't get that undercut. Which is something that, you know, in a couple weeks I'm gonna ask Oliver Kell about, is because he's so damn good at buying gap ups into strength, and I need like that undercut type of setup because it's so much easier to define my risk than like the opening range low on a gap up.
So Yeah, I trade with Oliver every day, but he's really really good at just trying to build a position, and that's something I could be better at. So, for example, if he's taking a big gap up where he thinks like, okay, maybe it's not going to go higher over the next 2 to 3 to 4 days, but this is a name that I want to be in, and he's gonna start building a position. So he's slowly piecing in over time to try to build up his position to where he wants it, while it starts to create that flag, while it starts to consolidate, pull back, whatever you want to have it, because he wants to be involved with it, and he's really really good at doing that. So like back to the undercut and rally thing. Um, so this morning, like literally right off the open, I was watching Roblox because I thought it had a really nice pattern. It was double inside, and inside day candles always got to pay attention to. And it gapped down, but like look how it shook out that level, shook out the previous 2 days low. And then, I mean, it worked right away. I was really surprised about it, and ended up engulfing, and did sell some into strength up here. Always got to sell a little bit into strength. And then, obviously today's action was disappointing. It ended up rolling back down, but like this entry tactic, it was off the green line is the 5-day moving average. Like this entry tactic where it's off 5-day moving average support, it's undercutting an important support level, and then you reclaim it. That's kind of starting to be my bread and butter.
Yeah, TSDR calls that the go signal. You trade those a lot too.
Yeah.
His J Money's like these fake kind of breakdowns and undercut and like reclaim supports. Does remind me of when we had Nick Drendel on for that workshop like a week ago when he said buy the stock that everyone wants at the time when no one wants them, and then
Yeah,
place your stop. I
yeah,
feel like that's pretty similar to what you're doing here.
yeah, absolutely. Like I just, and it's psychological too. I think if there's a very obvious stop loss level, very obvious support level, and you see it go down through that, but then it can reclaim. There's probably not a lot of traders who are left in it. So if it were to reclaim, then you have new bulls. You have like almost a fresh life. That's kind of how I look at it.
And you got the best price. Yeah, exactly.
Quick question from the crowd is a brief one. RSI down at the bottom of your charts.
Yeah, waste of time. I should take it off.
I figured that was gonna.
I thought that was gonna be the answer.
I
Um,
literally MACD and RSI. I literally have no idea why I have them on. I will say though, what is a little bit concerning, I think it plays a better. It's more important at extremes, right? And so this definitely has me nervous on the QQQ. So this is pretty notable divergences.
yep.
So we'll see how bad that plays out. But I don't use RSI or MACD in my process every day.
One other question is so stuff like, and I don't know that I've seen you talk about it much, and maybe I missed it, but things like Rocket Lab, or IONQ.
Yeah.
Are you
These
you dabble in those?
these are very speculative names.
Yeah.
They're 20, like it's hard to say. Like I was looking at, I can pull it up. I was looking at RKLB all week, and I was really tempted to buy it here when it opened, retested the moving average. That's 5-day moving average and 10 EMA. And then I was also really tempted to buy it here when it retested, this kind of like resistance now turned support. But then a day like today, markets extended, it just gets wrecked. I will say, and I literally never trade names like this, and I did today, and it was a nice one. But I traded Sound.
Yeah.
Uh, it was inside day candle. It gapped down. It was down like 3% or something like that. I figured I wanted to try to get one of the momentum names, um, and so kind of what it looked like. So this was the 2 previous days high there, and then this was the previous day's low. So it was down like it's hardly even you can hardly even tell, but it was down like 2%. And then once it turned red to green in an inside day, candle, that's in these momentum setups. That's kind of my entry tactic there. So I bought it right here, and then it went up like 20%. I I was out of it when it lost VWAP, but by then I only had on a half position, and so yeah, it was a nice little equity boost on a bad day, I guess.
Nice trade. So JMoney bought SoundHound today. That's why the market sold off.
But yeah, like you said, Ion Q. I know is like Oliver's been long this, and he absolutely nailed it from down here. These types of names, IONQ, RKLB. Like for me, these are hit it and quit it. Like I don't want to overstay my welcome in them. Like I'm looking for high price stocks where I know what they do, that have institutions backing them, that have like real money in it. Now maybe this does have real money in it, but for me, when I see 9 to 38 to 40 or whatever it is, that's a momentum name. I don't even know what they do besides what quantum computing or something like that.
I don't know what quantum computing is. I'm just kidding.
Yeah. So like yeah, it's kind of a one night stand type of name, I guess.
Yeah.
Hey, one more question from the chat. So when you're taking, some of those failed breakdowns, reclaims of support, with really tight risk and a defined stop, are you getting on a full position there, or are you building into it?
Yeah, full position for sure. And
Full position, nice.
like to be honest, I'm doing even more than a full position, and then once it starts working, I'm then selling it down to a core full position swing price, if that makes sense.
So sometimes you're taking some like day trade size too, so you can peel some off of the day trade and have that mental cushion and give you that ability to kind of hold that with a little more
Yeah.
peace of mind.
Yeah, so Avgo, I mentioned it earlier, but I was trading it before earnings, and this trade basically was strictly off SMH. So it was this day, SMH. Look at this failed breakdown.
Yep.
That is super important. 237 support. You get that undercut and rally. So like I was trading Avgo basically on that. And so like at these lows, because my risk is so tight, like that is a really, really defined level of support going all the way back to September 12th. And so when I see this dip beneath, like that's a failed breakdown to me, starts working right away. I had a pretty big position on, sold some into strength, and then I would never hold a massive position overnight. I'm using like an entry tactic to immediately get profit that then can finance the rest of my swing trade.
And
Man, that's a fascinating strategy. Or just thinking about like, buying, support undercuts and reclaims like that. I mean, just think about how many trades you would have to lose in a row to, experience a significant drawdown, right? It really is amazing.
Yeah. It's undercut and rally, failed breakdown, whatever you want to call it. It's basically just defined support where then, one side of the trade, which would be the bears, is getting caught off guard. And then they're forced to cover, and you're kind of taking advantage of that. And then when you layer that into, leading names or leading themes, or here it was the semiconductors having the failed breakdown of the SMH, like whether you want to call it a short covering rally or big money, stepping in and buying it, any meaningful support that's broken but then reclaimed, I'm always interested in. And man, the guy I was talking about when the stream started, Adam Mancini, he talks about it religiously in his newsletter, and he says that 90% of his trades come from failed breakdowns.
From the best breakouts come from failed breakdowns.
Yeah, yeah,
Vice versa.
Yeah.
yeah.
I'm curious. Are you like when you're going through your morning routine or nightly routine or whatever, and you have a few stocks you're looking at coming into some supports and stuff. Are you like setting alerts on these and stuff, or just kind of watching them as they go at the open?
Yeah, so every day I go through my big watch list. I got like 400 names in here. Let's see how Bitcoin's doing. Holding the 20 EMA. So every night I go through all like 400 of these names, and then so let's say if I wanted to watch I'm not going to because it looks like shit, but let's say if I wanted to watch a firm, then I'll have a firm up, and then I'll start to kind of look at my levels. And so you can see I had this as support. Obviously, it really rips through, but if somehow it were to reclaim this 66, then you got the 20 EMA above. Maybe you can reclaim the 20 EMA. So sorry, Brocco. Back to your question. Every night my routine is I'm looking for setups, going through my entire watch list, and then going that same night looking at the hourly charts and kind of planning out my levels. And then I just kind of flip through them. So if I had 5 positions on and then maybe 5 names I was watching, I'm just kind of flipping through these as the day goes on, and I don't really set alerts, and I probably should. But
Gotcha.
I would much rather, if I start setting alerts, then I have 25 alerts going off and I start to get FOMO, and I really want to be focused
Oh,
on,
I've felt that before for
yeah.
sure.
And I really want to be focused on stocks that are worthy, that I decided the night before, that I have a plan with.
Yep.
Have you ever heard of TC 2000 charting platform?
Yes.
You
Yes.
got to get on it, brother.
No, I know. I work a full-time job, so I can't be ripping TC 2000 up on my full-time job.
That's right. That's right. I think I suggested it last time. People are in the chat are laughing at me right now.
They're roasting me. That's all right.
No, they're laughing at me. No, they're laughing at me because I always suggest to everyone to get TC 2000.
Oh yeah, use promo code TSDR.
Oh God. Oh God. Hey, I was short SMH into that failed breakdown, and I knew as it was closing up there, and reclaiming the 200-day on SMH that day, I was like, oh man, they're gonna roast this. I should be flipping right now. And yeah, sure enough.
Yeah, and that's like why it's so difficult to short, because like this looks like a Head and Shoulders. It looks super obvious, right? But a lot of the times they fail, and so I never like to short at the lows. It's shorting is a hard game. Shorting, you want to be shorting up here, right? When it comes up and it fails to make a new high, you want to be shorting when you get like a cross back into moving averages, like maybe. So it was looking like crap here, like maybe something like that. Like if you had it up here, that's an awesome entry. But I will never short something that's making a new low.
I had a question I was going to ask earlier that I forgot. So I was curious if when you're in some positions, a lot of positions they're working really well. Maybe the market starts to get a little bit extended. Extended can stay extended for a while. But some of those signs start flashing. Are you ever putting on anything to somewhat hedge your portfolio? Are you just maybe de-risking some size and some names, or how do you allow yourself to kind of let winners go without the fear of taking a big drawdown on like a day like today? Because I know TSDR, you had like a SPY put hedge that kind of help save some of your losses today. I'm curious if you do anything like that.
No, I don't. I don't hedge. I like, let's say if I was really long Tesla, I wouldn't then get long TSL. What is it? What's the Tesla ETF?
Tesla Q.
Yeah, like I wouldn't then, long a short ETF to hedge. Like for me, I would rather just start booking more profits and then you just kind of want to ride the moving average. I I just think if I start hedging, maybe I'm then hoping that the market goes down and then I miss some good entries.
Yeah.
And that's another reason why I don't short is because, you know, I definitely have had a little bit success shorting, but the risk to reward for shorting, in my opinion, you're going to miss the best entries. Um,
Yeah, I had nailed that correction on the Qs in July and shorted it the whole way down and did really well throughout that time period. But after that, when the market had bottomed, it was particularly difficult to get back in like the bullish mindset again. And
yeah,
not to mention the bad habits that you kind of develop shorting
yeah,
that actively on a day-to-day basis. It took me a while to really get back on board with the market. And I kind of wish I maybe had never even shorted, except for maybe the first leg down that was kind of the easiest part of the trade.
yeah. I think shorts, you just want to be quick with them. You want to take your money and run, and then you're mentally in the right headspace to then have your money. Like if you're shorting, you have a leg up on other. If you're shorting and you're making money, like you have a leg up on other participants. Whereas opposed to the guy that maybe got wrecked. And so like I would just like take your money out of your shorts and then you're mentally prepared to be able to capitalize when the market presents that opportunity. Because like for example, if I perfectly shorted this, I guarantee you I would have like been like trying to load up on shorts here, like adding to my shorts. Like I would have said, oh, that's a bear flag. But what I would have failed to realize is I just made so much money shorting this on the way down. I would say, oh, that's just a bounce. Look at how well I did right here. Oh, that's just a bounce. But really, that's capitulation, and that was the bottom. Where I was all cash here, and on that Monday when that happened, I had a fresh mindset. Ready to take some stabs
Yeah,
at.
let's try some things. Yeah, for sure.
Yeah. And then like I never knew that would be the low. And again, I was long, and I thought that this was going to break down, but we just kept making higher lows. Like it doesn't look like it, but every single day in
Mhm.
every single one of those candles, you make a higher low, and then eventually you get through the 90 EMA.
That was an interesting couple of weeks there. Yeah.
Yeah.
Um, man.
I think that's all the questions I have, unless you got anything else.
We'll end it with, so we got a few trading sessions left of 2024. If we want to skip ahead to 2025, or maybe in just the near term, at the forefront of your mind, forget today's action, what the Qs are going to do going forward. Just you yourself, Mr. J Money Stocks, the man, the myth, the legend. What do you want to do to get a little bit better next year or next quarter? What are you looking to improve on?
Yeah, just not trying to make a ton of money every single day. You don't need to make a ton of money every single day in the stock market. And so I over traded this year. I think that's a big, like a big, what we talked about at the beginning of the stream. That killed my performance. And like, if I were to just take out 2 months of the year, I mean, it's easy to say in hindsight, but if I had my head on straight and wasn't trying to be a trader that I'm not comfortable with, I would have, had a lot better of a year. And so next year I want to always just know who I am and don't fall into the trap of over trading and choppy or volatile markets. Just wait for the correct environment. And like if you can get 3 to 4 good runs per year, that's all you need to make your year. And so that's kind of my focus for next year is just simplifying things, I guess.
Uh, I love that. I think every single trader can relate and can always work on
Mhm.
improving that. I hope
Like even like right, right in this, well, I guess that was okay. But like there's even in an uptrend, there's certain times, I guess the best example is like this. Like you look at that and you're like, oh, that's only a pullback to the 20 EMA, right? But like there's still a lot of money to be lost in that. Like that's still a bit painful because like, so what I'm trying to say is like just take your profits and just be ready for whenever the next turn comes.
I love it. I'm with you, man. I'm with you. I wish I would have sold more at the highs today, and I wish I would have bought more at the lows on August 5th. That's,
Yes, sir. All right, fellas. Well, thanks for having me on.
Oh, it was a pleasure. You enjoy your plans for the rest of the year, of course. For the rest of the year, and it was a privilege, man. Thank you.
Right on. Thanks, fellas. Have a
Yeah,
good one.
thank you, man. Appreciate it.